wants to know he's going to do.
This is the Stanley Cup. What's going to be your history in finance? We're talking about financial records, when to save and when to shred, plus a bonus section coming up. Welcome to What's Next with Money. You know, we got to know when to shred them, when to hold them. It's a constant question. I've been interviewed about this online and in other media many times. Or as some might put it, you know, I will save the good financial years and just shred the bad ones. Well, what's your advice and experience? Viewers have been asking, let me know what you think in the comment section. You're watching What's Next with Money, a program with smart insights to guide your financial decisions. We're going to talk about financial records, and I'm going to give you general guidelines. Your situation might vary, and check with a lawyer, accountant, or CFP professional in these situations. You're under IRS or state tax audits. You might be going through a divorce. You might have some business challenges, issues in the business, competing interests, partnerships, disputes, out-of-state or international property, even inherited property that is not settling. In other words, it's still active. Also, please be aware, in this cloud-based economy, many e-receipts are there digitally. And we have a special video, how to organize your vital documents and financial records. It's our most viewed video to date. I'm going to showcase several categories of records with a fast-paced commentary to establish the why behind why you might need to keep a record or document based on your life circumstances, and conversely, when to shred them. Plus a special bonus section. So here's our first category, the big one, tax records. I'm going to state this on the conservative side, but I've got some validation for it. I save tax records, that's the returns and the backup material, 7 years after the return is filed. Here's why. The IRS, once they determine you're going to be audited, they have, by statute or regulation, they can do a 3-year look back. And then if there are significant, in their determination, underpayment issues, they can go back another 3 years. Folks, that's 6 years. And if there's fraud involved, then the look back is unlimited. So you filed and maybe almost a year has gone by, then the IRS does have 6 years to, in most cases, legitimately look back. So that's why I say 7. And hey, if you have not, or friends of yours have not filed tax returns, if you have a legal compliance issue with the IRS, then hold these returns and these records indefinitely until that's resolved. Keep business, real estate, and investment purchase records. This forms your cost or tax basis until you sell the item. And then wait 7 years after the return is filed. And hey, you might want to run for office. I did that. Or you might be getting a government or even a contract work with a security clearance. That's classified. I'm not going to tell you if I'm under that. But tax returns should be, in these cases, and this is my preference, if you're in public office, you've got security issues, I'm holding those returns indefinitely until I'm out of those obligations. Then there are W-2s to show proof of employment for Social Security Administration. We're going to touch on that in a little bit more, as well as home improvement records. We're going to break that down in specifics. Now, another category, receipts. Now, receipts for home-based or small businesses or charity donations definitely keep along with for tax purposes for the 7-year period. Credit card, I keep that until any disputes are resolved. Warranty, I keep those for as long as you have the item. And record keeping for current insurance coverage. You know, I shred a lot of older insurance policies, but I try to keep current proof of purchase of current policies. making sure I know and I can show that I've paid those premiums. But if I have active claims, I'm going to hang on to those policies until those claims are resolved. Big ticket receipts like cars, home improvement, real estate, some furniture, guns, collectibles, hobby items, you want to keep those for resale, insurance value purposes. And we keep a lot of those in a firebox or safety deposit box out of the hazard area. We have 2 well-regarded videos on disaster prevention and recovery. We'll have links to those. Now, home improvement. I tie this a lot to the tax area. I keep these until I sell my home, and certainly some home maintenance might meet the definition of improvements. But I can share this list with prospective buyers, appraisers, even real estate professionals. If I've got a transferable warranty on my home, I want that preserved for the next buyer. That can add to the value of your house. Now, for keeping track of these home improvements, I just use a simple Word doc. I list the improvement, the costs, the dates, and this helps me also as a planning document, thinking through what might the next improvements be and how I can sequence those in a very nice budgetary manner without borrowing or borrowing much. And some of these might be for the comfort of enjoyment of my home, fixing it for perhaps elder care, lowering costs like adding insulation or HVAC upgrades. If you think you will owe capital gains on the homes, these are profits after allowable home improvements are deducted. But anything that you sell the home for, if it's jointly held over $500,000, you're going to pay long-term capital gains tax on that. And if you're a single filer, it's $250,000. That's why you want to keep track of these home improvements. You know, this could change or lower your tax bill because it shows a new cost basis. And again, it's a great planning document. And this, I lock into that 7-year tax guideline after that return. That sale is documented in the tax return. Another category, medical bills, health savings accounts, flexible spending accounts. You know, I follow in some of these cases the tax record holding period. We have a really good video on health savings accounts. We'll have a link to that. And if there are medical provider or insurance dispute, keep those until this dispute is resolved. In the area of utility bills and subscriptions, I'd say most of this is held electronically from the companies providing those services. Some of these may be tied to automatic payments, things you should check periodically. And for some utilities, some entertainment, you might negotiate lower charges, new kinds of packages or specials or discounts you hadn't thought about. You'll need to review your subscriptions periodically. So all this record keeping and documentation can also be a way to cut one's budget and is a good planning tool. And in the utility area with the consumption of energy, those records, generally electronic with those energy companies, utility companies, can be shared with prospective real estate purchasers of your property. And if you have a home-based business, some of that might be allowable as a tax deduction. So we're talking about financial records, when to save, when to shred, and I've got a bonus section near the end. Next, credit card statements as a category. Well, I keep those tied to tax issues for charitable deductions, contributions. There may be some small business expenses listed on there if you have such a small business. You've got billing and fraud disputes. You want to check these for accuracy. Most of the time you do that online. But I also look out for any kind of fishy transactions. It might be a reason to contact the credit card company's security division. Then there's investment and real estate records, brokerage statements, IRA, 401k, including rollovers. I keep until the item is sold in 7 years after for tax and audit purposes. Now, the IRA contribution records, you may not need to keep a lot of that, but you want to make sure you're getting credit for non-deductible contributions to make sure you're not going to be taxed for those if it's a taxable IRA, contributory IRA situation. What about stock certificates? These are old, actual physical stock and bond certificates that have real value. They need to be deposited in a brokerage account or a custodian what is called street name, and there may be dividends connected to these. You want to protect them from theft or loss. Often you might see these with parents or grandparents. Could have been a gift, but you want to get those secured and deposited electronically in an appropriate brokerage account. Then we have car titles, home title, deed of trust, business ownership documents. I use the tax rules for these, again, tied to possible sales and then 7 years after. Now, some real estate records you might need to keep even longer if there is a trail for real estate business transactions of a 1031 like-kind exchange. Because 1031s establish new cost and property tax, and in some case property tax basis, and there might be depreciation recapture. So if you're getting value from this video, please be sure to hit the subscribe button and the like button. This moves our content to more folks. You get a little reminder bell periodically when we post new episodes on Thursdays. Now, paycheck, e-statements, I don't think these are really necessary to keep. But you want to periodically look at these records to make sure, and they're generally online, that tax withholding and other items are in order. Now, if you happen to work or have worked with a small business or a small nonprofit, and you're kind of uncertain about their viability or their ability to keep good records and file records with the appropriate taxing authorities, that's a big deal. If you need proof of employment for the Social Security Administration, you need 4 quarters of credits per year for 10 years of employment. So in 10 years, you could qualify for a basic Social Security retirement benefit. Now, if you've got trouble establishing that, especially with up and down employment situations, you want to go to, and you should do this anyway, go to My Social Security Account online, register an account, your account, and find out if you've been properly credited for past employment situations. Look for gaps, and then this will help you with the appropriate credits that you deserve to make sure you meet those minimum standards of Social Security. Another category are bank and credit union statements. Again, I keep these until disputes are resolved and maybe the year-end statements for tax purposes. And those are very important. Now, what if you leave that financial institution? They've kind of got like a client retention incentive. You're likely to forego some of those records access because so many of them are in the cloud. Now, some have a 10-year window of how much they keep. You want to check before you're changing institutions so you're not a digital records hostage. See our video about digital assets for more information. We're talking about financial records, when to save and when to shred, plus a bonus section coming up. Then there's the category of loan statements and payoffs of real estate, credit accounts, car loans, RVs. Now, I save these for credit record disputes or inaccuracies. You can go to annualcreditreport.com, and over a year's period, for free, you can check your credit report with each of the 3 credit bureaus. And what if you borrowed years ago from a place that might have gone out of business and you paid off a loan, but that was never credited on your credit report? This has happened twice to me when I've done mortgage loan applications or small business loan applications seeking approval. I got held up in closing twice. One involved a gym membership where initially we paid kind of a monthly installment, but we ended up actually prepaying the whole year. It was never credited or acknowledged on the credit bureau, and the gym company went out of business. But I had documentation to show that was paid off. Then we had a big real estate bankruptcy of the developer we bought real estate from. A lot of this went to a trustee in a law firm. Unfortunately, this popped up when I was trying to close a deal for a major loan and or line of credit, and I had time pressures to get that authorization to get that report off. It was basically a lien on one of the lots we were buying or that we had owned, and we had already paid that off, and we had to actually find the attorney and work it out. It wasn't easy. A lot of times you end up with a deed of trust or a mortgage or loan payoff statement. You want to make sure you also get title that has the lender off that if the debt has been released. Another big category are wills, trusts, powers of attorney. Powers of attorney can be of several kinds. Here are three: general, healthcare, and health records, kind of the HIPAA stuff of financial records. Who's allowed to have those powers? I keep these and save these even a few years after an estate is settled if a death is involved. Now, insurance. I usually keep the declaration pages and some of the amendments of the current policies, but I only keep the active ones. And if there are claims, disputes, I keep those for a longer period. I also, just personally, being conservative, have the habit of keeping proof of premium payment on current policies, just in case there's any dispute or some money hasn't been processed properly. For title insurance, I certainly keep that as long as I own the property. Now here's the bonus section that I've talked about, some things you might not have thought of, some nuances of record keeping. And a lot of these are from my point of view. While I keep a personal and business tax return after 7 years or at the 7 years point, I shred tax backup records, kind of the preparation records, unless there's an investment there I have not sold. So after 7 years, I'm kind of down to the tax return and maybe in the investment area, some year-end statements of like mutual funds, stocks, brokerage accounts, especially taxable brokerage accounts. Now, there's an alternative to financial clutter. We can put a lot of these records on digital media, CDs, flash drives, or upload in the cloud. And you should consider, if you're doing physical record keeping or even digital record keeping, storing them away from your home or disaster videos. Talk about that. We'll have links to those. Always check with your credit card, bank, brokerage firms to see how long they keep your records on file digitally and how far back. And for me, records are important not just for tax purposes, but for job security clearances and disclosures of conflicts of interest, like if you're serving on a board, you're part of a business enterprise or business association. And maybe you keep some of these records because you want disclosures that outline how you are resolving or disclosing conflicts of interest, and always the tax basis of investments. That's why you keep some of these credit and investment documents longer. Now, saving a tax return just for fun for family history is a window into your family's economic history. It shows big employment, investment, charitable spending choices, and decisions made. They also show that costs and incomes rise and that inflation is real. I like to look at my parents' or grandparents' tax returns of years ago. It shows a long view of life and trust in the family's future as well as the nation's. They show economic restraint yet they're forward-looking. And I can see what they pulled off with modest earnings and patience. So with financial records, you now have a better idea of when to save or shred. And we have links to several videos that will put this in context. Organizing financial documents, digital assets, the videos on disaster prevention and recovery, money maps, and health savings accounts. So be sure to hit that subscribe and the like button, and don't forget to share. And I'm looking to see you next time on What's Next with Money.